The previous 4 months have not been kind to our net worth numbers. Has anything changed for this month? Tune in for this episode and find out. If you're new to the series, my name's Jack Duffley and I'm a 25-year-old real estate attorney and investor, and in this series I'm documenting my path towards reaching $1 million in net worth and a $30,000 per year passive income from my investments. Every month I document my progress, or lack thereof, and I include a very detailed spreadsheet in the description below, and that's as close to a real-time log of my balance sheet and my current investment holdings. But as I mentioned at the top of the episode, the last few months have not been kind to our net worth. We've lost 5 figures in multiple months, which is pretty significant given that we have now a below 6-figure net worth. And that was mainly because of 2 things. For one, you have the ongoing market turbulence, especially in the stock market, where you're seeing a lot of equities pull back in price, so my investments have not been spared there. Some of them have been hit significantly harder than others, of course, but this was also during a time that my wife and I were making our move to Houston. So we were buying a house, we did quite a few renovations to it, some of it beyond the actual equity value that we'd recoup, so it was a net worth loss in some capacity. And we've continued to spend towards the house, especially as we look to finish furnishing it, though the spending has slowed down dramatically, but nevertheless, there was a lot of spending over the last few months. And we were also getting our former primary residence ready to rent, so it was sitting vacant for a little while. So we were effectively paying 2 mortgages at the same time. And during most of this time, my wife was waiting for her licensure so she could actually start working here in Texas. That was the main reason we made the move down. So we were still on the same income as before, but thankfully my wife is now fully licensed and she's working full time, so we are now dual income. But now that that's the case, we're trying to focus a lot more on deleveraging over these next few months, really few years, and now that my wife is working full time and we're moved into the house and everything is going well. We did still drop a few grand on furniture in the last week. We actually bought a Sleep Number mattress. As a good shareholder, I thought I'd support the cause, and as a bonus, I'll get a very up close look at their product. So that was a pretty significant purchase, but thankfully we're not going to have to do that again anytime soon because now we'll have a mattress for many years. And I'm optimistic that it'll be a good mattress. But besides that, we focused a lot of effort towards paying down the spending that we've already been doing over the past few months. We put a lot of that on credit between my HELOC, my margin loans, and our credit cards, of course, but we want to pay down the credit cards first because you don't want to pay super high interest when you don't have to. So that's where the majority of our money has been going. So with all that said, let's go ahead and get into the numbers. As a reminder, last month our net worth was just over $78,000. As always, let's start with the good stuff, the assets. The markets have been very volatile, mainly towards the downside over the past few months, and this month was no different. However, it wasn't as brutal as it has been, at least for my own portfolio. So that applies both to our taxable stock holdings, which are mainly individual stock picks, but also our retirement accounts, which are mainly index funds. I would like to add more aggressively to my stock portfolio, but we just have a lot of debt to worry about at the moment, so I probably won't have a ton of new contributions for quite some time. At least for my taxable holdings. Right now for my 401k, I make automatic contributions, so I don't really think about it. As for our real estate holdings, I like to think that these valuations are fairly conservative, or at least they would kind of take into account fees from selling, so this should be what they would really be worth liquid if I were to sell them. On paper, you could probably add $25,000, $30,000 in equity if you wanted to, but again, that doesn't take into account the actual fees to sell and taxes potentially, and all that would whittle away at the eventual sales price, and plus it builds in a little bit of cushion if the market pulls back a bit. At least that's how I like to think about it. And not included here would be my cash reserves that I have for my rental properties. I have many months of expenses set aside in cash. I don't include it here because I like to think of the cash as good as gone, which means I can weather a storm for some time even if I don't include it on my net worth. But all told, that means our assets are sitting right around $1.08 million, which is largely unchanged from last month. And now on to liabilities. The $3 grand left on my credit card balances can largely be attributed to the Sleep Number purchase, so that'll be gone next month. But after that, the majority of our take-home pay is going to be going towards our M1 finance margin and also the HELOC balance, just to get those down. Those are revolving loans, but they're also variable rate loans, and right now rates are rising, so that debt actually gets more expensive by the day. Or not really by the day, but however often the Fed wants to raise rates. And then once those balances are down, we could always re-leverage them and then throw the money at other types of debt, like our student loans or the promissory note, so that we can get those paid off as well and start the process over with paying down the HELOC or revolving loans. But right now the student loans are at 0% interest, so I am not in a rush to pay those down. Plus there's all the talks from the government about waving a magic wand to get rid of them, and I'm not banking on that, but that could always happen. But in short, that means our liabilities are back under $1 million, which means our net worth has grown to $84,000, an increase of just under $6,000 from last month. That means our debt ratio has fallen to 92.25%, and our passive income remains at $1,100 per month. Yay, we stopped the bleeding. We'll see how long that lasts. But like I mentioned, we're gonna be focusing a lot of our energy towards continuing to deleverage. We got a nice start to that process this last month, and we're trying to accelerate that as time goes on. However, I am looking to acquire a business. So if that means raising more debt or otherwise getting the money from someone else to acquire the business, then I'll do it if the numbers make sense. I'm going for a very high cash flow business relative to something like real estate, which does have decent cash flow from time to time, but compared to something like a business, the numbers from a cash flow perspective can be pretty lackluster. Though of course the risks are different. But anyways, that would be one of the few things in the meantime that could trigger taking out a bunch more debt to actually purchase another asset. I don't want to do that for very many things, but if it's a really great deal and I can make the numbers work and I feel like I have enough cushion otherwise, then I'll do it. And of course, I'll be documenting that process on the channel, and I'll let you know if and when I land something. But otherwise, I feel like things have stabilized and we can really start focusing on deleveraging in the meantime. But do please subscribe if you don't want to miss future updates. I put out a new one of these episodes every single month on the first of the month. But until next time, take care.